Well, global growth fears and uncertainty over a China trade deal slamming stocks today. The Dow plummeting 300 points on news the Justice Department will continue to pursue the extradition of Huawei CFO, and with China signaling a threat to U.S. trade talks if she's not released. Investors were kind of caught off guard by all this, many believing a report last week that a China deal was imminent. But if you were watching Bulls and Bears on Friday, you already knew that the administration was discounting those reports. Roll tape.
Nothing has been resolved, nothing on paper, no contracts. I want to be an optimist about China trade. The president has indicated a certain amount of optimism about China trade. He's communicating with Chinese President Xi. But I must tell you, some of these news reports are simply inaccurate.
So, gang, are we ever going to make a trade deal with China? What do you think?
I'm optimistic about a China trade deal before March 1st, but we have a long way to get there, right? It seems like reports are saying they need to move on structural issues like intellectual property protection and this forced transfer of technology, something that I think China might massage for maybe wording into this March 1st deadline. But, you know, China needs a deal, as we saw with the GDP report and the China growth figures. It's much worse. The 6.6% is what the headline number says. And that my feeling is that there's a big overhang of debt and exports are really crunching into the economy, down about 8% according to the Wall Street Journal in 2018, guys.
I agree with Susan, but however, right now the trade war is not having as much direct effect on the economy as the consumer sentiment does, because China has gone from a export economy to a consumer-driven economy, and that transition has been done by a massive amount of debt, which President Xi started pulling back just a couple of years ago. That has more reason for the economy suffering right now. The trade tariffs right now the exports only account for about 9% of the total economy, and it's only about 9% of that 9% that are affected by these tariffs. But when you have a consumer-driven economy, as China is having, then you have consumer sentiment because of these trade tariffs. That's when you start seeing the economy start backing off. So it's not necessarily a direct effect on it, but it's a direct effect on the Chinese consumers that are pulling back, similar to what you see in the United States right now with CapEx pulling back because of consumer sentiment.
You know, I think that we have the. I was going to say, I think that trade is the biggest preventable headwind to the market right now. And I think the president is very focused on that. So from a timeline crunch, I think that even though we're in a stronger position overall from a timeline standpoint, I actually think we're in the weaker position. And I think we will probably get something, like Susan said, a partial deal by March. But I don't think that it's going to address all of the broad things that need to be addressed. And so potentially we get something that's broken up into pieces, where we get part of it done right away, which I think will be a boon to the market and the economy, and the rest of it on the come.
I mean, I don't see a comprehensive trade deal getting done by March 1st. We may see a few things like leak in, like they did before, like autos or pork. With respect to China slowing, I know the president put out a tweet today that he was proud of China slowing. No one should feel good about China slowing, because we're now in a global economy. So with China slowing, Europe slowing, you know, Germany, France, and the UK, it eventually impacts us slowing. And so even though we're the largest economy, we now live in a global economy. And so this whole idea of a slowness going on will eventually impact us, which is why a lot of economists are calling second half of the year or early into next year, you know, going into recession. I don't believe we're going to one, but that's how, you know, you have at least half of them thinking that now.
You know, nobody's talking about the fact this is the first time I remember the Chinese specifically linking the arrest of this Huawei CFO with trade talks. I'm just wondering, is the fact that it was made explicit, does that have any significance? I think, well, first of all, I'm skeptical about these reports, first of all, because I don't think they want to make that connection between the two. Huawei is supposed to be a private company. You don't want to link it to state actions like trying to negotiate a trade deal. So I would be hesitant to believe some of these headlines that we're reading right now.
Well, we've spoken about this often. You know, Huawei has been on the radar of the United States for years. Under President Obama, they did not allow Huawei to even move anywhere near military bases. So
people forget that.
So now that if the Chinese government is saying, if you do this with a private citizen, then this is going to unwind our, you know, how we look at our sovereign relationship. That goes to the whole idea that Huawei is probably a state-run company. So I agree with Susan. It doesn't. I don't know if it's fact or fiction what we're reading, but it doesn't bode well for where they want to go.
I completely agree.
It also underpins the way that we address. It also underpins the way that we address intellectual property, because you have to understand that even if China gets a deal, it's going to take them a long time to have that run through the zeitgeist of the way that the Chinese do business. They are used to doing business not by innovating, but by knocking other people off. And this is not just in the tech sector. This is in the branded sector and the consumer sector. This is a complete shift in their mindset in the way that the Chinese do business. So even if they were to agree to something, it's going to take a long time for that to cycle through their businesses as well.
I think China's just playing the game, though. I think China's using this Huawei executive to get some political favor on their side. I think they're just killing the clock. I think they're playing the USA. I think they just offered a deal, the same deal, buying about $1 trillion, closing the trade deficit that they offered in December when President Xi and President Trump met in Buenos Aires. To me, they're just killing the clock. They're playing this game because they look at the United States, and what they see, right or wrong, is a divided country, a government shutdown, a House that went Republican. They think that they can stay longer than the U.S. can. I think China thinks they're negotiating from strength here, and I don't see a trade deal coming. I hope we have one, but I don't see it.
Well, let's not forget there are 2 Canadian citizens now that are in the mix as well. They've arrested 2 Canadians. They've specifically called out, maybe they're not, Susan, specifically calling out the U.S., but they have specifically called out the Canadians before the arrest of the Huawei CFO, right. And then came the arrest of the Canadians. Is there going to be a trade going on here? Yeah,
the extradition of the Huawei CFO, and they're criticizing China for detaining the Kovrig and Spaver. Those are the 2 names of the Canadians that are right now in China. But, I don't think Canada is going to, they're in a tough position, don't you think,
they're
Canada?
In a terrible
because
position,
they have, yes, so they're trying to appease their largest trading partner, which is the United States, and also their second largest trading partner, which is China as well.
So how's it going to end?
I think you have to play the middle and say, justice is justice, and this is a diplomatic affair.
Yeah, I think the one thing we know is we don't know, because we've been hearing about this China-U.S. situation forever, and nothing's moved. We still have the intellectual property problems. We still have incredible trade imbalances. It's the same stuff over and over again. So when they talk about buying $1 trillion worth of goods, that's just money. That's dollar diplomacy there. Nothing really changes structurally, does it, really? I mean, does that appease them and say, we don't have to make those changes, those long-term changes? The best thing that could happen, even if we don't get the trade deals we want, is they end the whole tariff situation, because it is a tax to our consumer. And I think, as John was mentioning before, you have China, a consumer-driven country, you have the U.S., a consumer-driven country, and all of a sudden, they're both starting to show an incredible slowdown in consumer confidence. And those tariffs are hitting both sides, and it's being passed to the consumer.
The thing I love about what's been happening is, and this is a sore spot, not only for me, but I know it's for Larry Kudlow as well, these arbitrary trade stats. And I think, John, you've hit upon this as well, the fact that somehow by suggesting that if we have an absolutely equal balance between what we get from China and what we send to China, everything's going to be hunky-dory. That's not how it's worked, because right now, with the tariffs, we have a worse trade deficit than we had without them.